I'm going to highlight one green flag for C3AI stock, but I'm also going to talk about one red flag for C3AI stock. Of course, the stock has been soaring to start the year because of the hype from ChatGPT and the rise of artificial intelligence. And of course, C3AI is, expected that it would benefit from that trend, although we haven't seen the company deliver fundamental reasons why the stock price should be moving higher. What I mean by that is revenue and profits and those kinds of reasons why the stock price should move higher. So, in this video, I'll look at one red flag and one green flag for those of you interested in C3AI stock. So let's get right into it. I'll start with the red flag. So look up here. The company delivered revenue of 66.7 million in the quarter. Okay, that alone is, that's not a red flag just by itself. But when you look down here, free cash flow was an outflow of 72 million in the quarter. So the company spent 72 million dollars in cash, negative 72 million dollars in cash for the quarter to generate and even worse than that, to earn 66.7 million in revenue. So they made 66.7 million in revenue, but they lost 70 nearly 72 million in cash. 72 million in cash. To make matters worse, the CFO says here, breaking this down, 19.4 million was related to the build out of our new headquarters, which we moved into in February. Really? You're spending tens of millions of dollars building out a new headquarters when you're losing millions of dollars for your investors? Really? That's what you're using the cash that investors have given you to build out your headquarters at this stage of your business growth? I find that to be a little bit early, a little bit too much and a little bit early to be spending on headquarters tens of millions of dollars while you're losing tens of millions, nearly $100 million for your investors. Operating loss margin negative 23%. Growing customers at a paltry 8% rate to 236. You only have 236 customers. You're barely closing any deals in the quarter, and you're going out and you're spending at least $19.4 million dollars. That was in the other quarter. And they're saying we continue to expand our headquarters and will have additional cash outflow in the following quarters as we take over additional spend. So not only did they already spend this much money on their headquarters, but hey, heads up you guys, we're going to spend even more money. So to me that's a big red flag. When I'm thinking about giving money to a company, right? Cuz when I'm investing in a company, I'm essentially trusting management with my capital because I'm taking ownership, a small ownership in the company, and I'm trusting management to be prudent managers of that capital. And what I see here is not prudent management of that capital. So I would need to see so much good stuff on all of the other areas of the business in order to convince me to invest in a company that makes these kinds of decisions with capital. So I need to see so much good stuff everywhere else. That means the green flag needs to be so positive that convinces me to go into this and say, okay, you know what, management, they're spending all this money on the headquarters, and I think that's a little bit irresponsible. But you know what? They're doing so good in all of these other areas that I can overlook this one area of mismanagement because hey, nobody's perfect, and everyone makes some mistakes, and everyone and this is, it's a matter of opinion anyways. It's my opinion as an investor that this is not responsible. Those of you watching the video might say there's nothing wrong with that. There's nothing wrong with the company spending $20 million building out its headquarters, even though they're still losing a lot of money for investors. That's an opinion, right? It's my opinion, and so I understand that that might not be a deal breaker for everyone, but it's potentially a deal breaker for me. So I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Now let's move on to the green flag. The green flag, okay? So we expect gross margin to be negatively impacted by the number of pilots active in the fourth quarter. Please recall that during the 2-quarter pilot period, customers will have unlimited runtime and premium support resources sufficient to be successful with their target engagement and gain value from the C3 AI software. So a lot of jargon in there. Let me try and break that down into more simple terms that we can digest. What this means here and why this is a green flag is C3 AI's profitability has been constrained because they're rolling out free trials to some of their clients. They're telling clients, hey, we're so confident that you're going to like our software, that you're going to like what we have to offer you, that we're going to let you use it for 2 quarters, or 6 months. What it seems like here, 2-quarter pilot period, because we feel confident that at the end of this 2 quarters, you're going to love our product so much that you're going to sign a deal with us and you're going to become customers. So this is a green flag for C3 AI over the next few quarters, because some of these customers that they have right now in their pilot program, in their trial program, are going to stick around and turn into real customers. And so as investors right now, you're experiencing the negative side of it, because when they're giving these services to the companies, it's costing C3 AI money, right? They're going to have to support these services. They're going to have employees supporting it. They're going to answer questions. They're going to maybe send staff on site to help integrate the system into the enterprise software and all of that stuff. So that's an upfront investment from C3 AI. But in my opinion, C3 AI would not be making those upfront investments if they weren't confident that that a certain amount of those customers are going to turn into paying customers, right? Otherwise, why would you offer free services unless you were confident that those free services are going to turn into paying customers? So that's a green flag, right? That's the green flag that C3 AI investors have to look forward to. Okay, so the green flag is all of these customers in the trial period that might eventually turn into paying customers, and the red flag is this management irresponsibly, in my opinion, spending money on headquarters, more than $20 million on headquarters, when the company lost 71.7 million in free cash flow in the most recent quarter, and has continued losing cash flow, and is losing money on the bottom line for several quarters. All right, so there's my one green flag and one red flag for C3 AI stock. As always, I truly appreciate your viewership. If you like this video, I'm going to link you to several of my videos at the end of this one that I think you'll enjoy. I'm also going to link you to some of my playlists that I think you will enjoy. I've done hundreds of videos on over 100 companies, and you can look through that playlist and see which one of the companies that you're interested in I have videos on. So you could go in there and see my videos, see my opinions, see my research and on the companies that you're specifically interested in. All right, I'll see you over there. Thank you for watching.